All right, let's dive in. We're tackling Morgan Housel's The Psychology of Money today, but we're going deeper than just the book itself. We've got articles, in-depth reviews, even a YouTube video breaking down some really interesting points. So think of this as like a multi-dimensional look at how our minds, our past, even our behaviors can totally mess with our money decisions.
It's funny, right? We think about finance, and it seems so logical, all about numbers. But this deep dive, it goes way beyond the usual tips about budgeting and investing. We're going to uncover the hidden stuff that really drives our choices.
Okay, so let's unpack that. Housel's big idea, and it's in all these sources we've got, is that money decisions, they're not just about cold, hard logic. It's about how our personal histories, our values, even our psychology, yeah, they all play a part.
Right from the start, Housel's got a chapter called No One's Crazy, and it nails this idea. He says we all see money differently because of our own life experiences. Think about it. Someone grows up during crazy inflation, they might be way more into stocks. They've seen firsthand how holding cash can be, well, risky when it loses value fast.
Makes total sense. But then someone who's seen a booming market their whole life, they might be more okay with risk. They've witnessed incredible growth, right? It's not about being right or wrong. It's about how those individual experiences shape how we make financial decisions.
Exactly. One sort of Livin talked about the lottery and how it's so appealing, especially for people who don't have a lot of money. Logically, winning is almost impossible. But the psychology, that hope of a life-changing win, even if it's unlikely, it's powerful.
It's that human desire for a shortcut, isn't it? But then Housel and a lot of these sources, they bring up this amazing idea, compounding. And the interesting thing is, it's not about getting rich quick. It's about letting your money grow steadily over time.
It's like a secret weapon, building wealth in the background. One thing that really stuck with me, 96% of Warren Buffett's wealth, it came after he turned 65. Talk about patience. But it's more than just being patient, it's how our minds work. We overestimate what we can do in the short term and totally underestimate slow, steady growth over decades.
It's powerful, but you're right, patience is key. There was this example, they used £100 a month investing, someone starting at 25 versus someone waiting till 35, even with the same average returns. The difference by retirement, huge.
It's crazy how time becomes your best friend, but you can't talk compounding without risk. And Housel's view, it challenges that whole work hard and you'll succeed story.
He's saying success isn't only about hard work and smart moves, luck and risk, things we often can't control, they play a massive role too.
He uses Bill Gates as the perfect example. We all know Microsoft, right? But imagine if Gates hadn't gone to one of the very few high schools with a computer lab back then. Would Microsoft even exist? It makes you wonder how much success is actually about being in the right place at the right time.
It's like the butterfly effect, right? Tiny things leading to huge outcomes down the line. But there's a flip side. Housel talks about Gates' friend, Kent Evans, brilliant guy, shared that passion for computers. But Evans died in a mountain climbing accident. Life can be unpredictable, and sometimes things are just out of our hands.
And that's why recognizing luck and risk matters so much. It's not about getting discouraged. It's about being humble, both about our wins and how we judge other successes. It gives you a more realistic view of achievement and setbacks.
It challenges that self-made myth, for sure, and it makes space for compassion. If we see the role of luck, we're less hard on ourselves, less hard on others for things we couldn't fully control.
And this all leads to a question Housel keep asking, what is enough?
He's talking about how we keep moving the goalpost, we hit a level of success, but then we want more, something bigger, always out of reach, like keeping up with the Joneses, but it's happening inside our own heads.
Exactly. He even has this great quote. He says, the hardest financial skill is getting the goalpost to stop moving.
So true. Everywhere we look, there's messages about what we should have, what we need to be happy. It's easy to get caught in wanting more, even when we have everything we really need.
That raises a big question then. If financial freedom is about having enough, how do you define enough?
That's something we all need to figure out, because if we don't know what truly matters, we end up chasing wealth forever. It's never ending. It stops being about security and becomes just wanting more.
And that leads us to another idea from Housel and some of the sources. Wealth is what you don't see.
Okay, that seems a bit backwards. We usually think wealth is the fancy stuff, the car, the big house, the vacations.
True, but Housel says that's not the whole picture. He says real wealth is often what you haven't spent. It's about that safety net, having options, being financially unbreakable.
One source had this analogy. They called it the man in the car paradox. Picture someone driving a Ferrari, right? We admire the car, but not necessarily the person. We might even assume they're in debt up to their eyeballs just to show off.
It's funny, but it makes you think. Those status symbols, they're kind of empty. True wealth isn't about impressing people. It's about being secure enough to make choices that match your values.
So it's not about the things. It's about the freedom and flexibility real financial stability gives you.
Exactly. Which brings us to another key point from Housel's book, flexibility over intelligence.
Wait, so we're not just talking about money flexibility here. It's something bigger.
It's about being adaptable in a world that never stops changing. Housel says, in today's world, intelligence is everywhere. What really matters is being able to adjust, learn new things, be open to different ways of doing things.
Being agile, being responsive when things are uncertain.
He puts it in historical context. 100 years ago, competition was local. Now it's global, and technology is always changing the rules. What worked yesterday might not work today, and what works today might be useless tomorrow.
So you've got to be able to learn, unlearn, and relearn constantly.
And that's crucial for money, too. Changing your investments, adjusting your budget, even switching careers. You need that growth mindset, not just for work, but for how you handle your money.
It's like having a whole toolkit. The more tools, the better you can handle whatever comes your way.
Exactly. And that leads us to another point. Housel and lots of the sources really emphasize expect the unexpected.
This is where it gets real. No matter how well we plan, we can't predict everything. Life throws curveballs, and the markets are unpredictable.
Housel says it perfectly. Things that have never happened before happen all the time.
Wow, that's kind of scary but true. One source talked about 9/11. Nobody saw that coming, and the impact it had on the economy. Massive.
It shows how events that seem totally unrelated can have a domino effect on our money. But it's not about being scared all the time.
Right, it's about being resilient, right?
Exactly. It's about having backup plans, spreading out your investments, and most importantly, being ready to adapt as things change. Because, like Housel and the sources say, the only thing that's constant is change.
So how do we prepare for the unpredictable? How do we make good money decisions when we don't know what's coming next? I think we need to dig into that more.
Definitely, there's a lot more to unpack there.
Okay, so we were just saying how important it is to expect the unexpected with our finances. But how do we actually do that? It's easy to say be prepared, but what does that look like, in real life?
One thing Housel and a lot of these sources talk about is building a margin of safety. It's like expecting things to go wrong, or at least not perfectly. So maybe you underestimate your income a bit, overestimate your expenses, and you're ready for those times when the market takes a dive.
So instead of freaking out when things don't go perfectly, you're actually kind of happy when they go better than planned, like a buffer for the unknown.
Yeah, exactly. One source even said the purpose of a margin of safety is to make predictions unnecessary. You're not trying to be a fortune teller, you're accepting that you can't see the future.
I like that. It takes the pressure off. But this margin of safety thing makes me think about another thing that came up. The difference between being rich and being wealthy. Is there really a difference?
That's a good question. Rich is often about what you can see, the stuff you have, the clothes, the car, showing off your success. But wealth, it's different. Wealth is more about what you don't see. It's the money you've saved, the investments you've made, that feeling of being financially secure.
So it's about having choices, right? You don't have to worry about material things or what people think. You're free to make decisions that match your values.
Exactly. And one source put it kind of bluntly. They said, spending money to show people how much money you have is the fastest way to have less money.
Ouch, but so true. It's easy to get caught up in that game of impressing others, but it can hurt your long-term finances.
Which brings us back to enough. If we know what really matters to us, if we don't always need more, we can break free from that cycle and build real wealth.
So how do we actually align our spending with our values? It sounds good, but it's got to be hard to do.
It starts with being intentional about your money. Before you buy something, ask yourself, will this make me happy, or am I just trying to fill some kind of hole? Make choices that support the life you want, not the life you think you should have based on what other people are doing.
Be mindful, right? Not just mindlessly using your credit card. And speaking of mindfulness, another big idea from Housel and the sources, saving. I know it's not the most exciting topic, but it's got to be important.
Oh, it's huge. Saving is the foundation of financial stability. One source said, you can build wealth without a big income, but you can't build wealth without saving a lot.
So it's not just what you earn, it's what you keep.
Right. It's about discipline and delayed gratification. Not spending everything you get, but thinking about your future self. One source even said, savings equals income minus ego.
I like that. The less your ego drives you, the more you can save. It goes back to not needing to prove anything to anyone.
Exactly. Real wealth isn't about showing off. It's about security, living a life that matches your values. But saving's just one piece. Housel also talks about your time horizon.
What does that mean? Time horizon.
Basically, how long you have to reach your financial goals. Someone in their 20s has way more time than someone in their 60s, right? So they can take bigger risks with their investments. They have more time to recover if things go bad. But someone nearing retirement, they need to be more careful.
Makes sense. But how do you know how much risk is right for you?
That's where knowing your risk tolerance comes in. How comfortable are you with maybe losing money? There are quizzes online that can help. But you should also think about your past experiences. What did you do when the market crashed before? Did you stay calm or did you panic and sell everything?
It's okay to not want a lot of risk, right? Not everyone wants to be gambling on the stock market.
Of course, there's no right or wrong answer when it comes to risk. It's about finding what you're comfortable with and what matches your goals. And speaking of the stock market, Housel and the sources had some interesting things to say about that. One thing that kept coming up was don't try to time the market.
So you mean don't try to guess when it's going to go up or down? Isn't that what all the experts do?
They do, but even they get it wrong all the time. Instead of trying to outsmart the market, Housel and these sources recommend something called dollar cost averaging.
Okay, break that down for me. What is dollar cost averaging?
It's pretty simple, actually. You invest the same amount of money regularly, no matter what the market's doing, like maybe £100 every month, whether the market's up, down, or just going sideways.
So it's like putting your investments on autopilot.
Exactly. And it has some big advantages. First, it takes the emotion out of investing. You're not tempted to buy high or sell low because of fear or greed. You're just investing consistently, no matter what. Second, it means you buy more shares when the price is low and fewer when it's high. Over time, that can lower your average cost per share.
That sounds pretty smart, especially for someone like me who isn't a financial expert and gets a little stressed watching the market go up and down.
It's a good way to reduce risk and maybe even get better returns in the long run. And this connects to another important point, staying the course.
You mean don't panic and sell everything when the market drops, because let's be honest, those drops are going to happen.
They definitely will, but like Housel says, enduring downturns is the cost of compounding. You got to ride out the storm and trust that the market will recover eventually.
Remember that we're playing the long game, right?
Exactly, and that's why a long-term perspective is so important. If you're checking your investments every day, you'll get spooked by every little change. But focus on the big picture, and you can handle those ups and downs and end up winning in the end.
One source even said to think of market volatility as a fee you pay, not a fine. It's the price of potential growth, which I like.
It's a good way to think about it. But even with a good investment strategy, you can't forget the emotional side of money. Housel says it's super important to not let your feelings control your financial decisions.
So don't buy or sell investments just because you're scared or greedy. Because let's face it, those emotions can really mess things up.
They totally can. Emotions cloud your judgment and make you do impulsive stuff that you regret later. One way to avoid those emotional decisions is to have a written investment plan.
Okay, what does that look like? Like a roadmap for your investments?
Exactly. It lays out your goals, your time horizon, your risk tolerance, your strategy, keeps you focused, and prevents you from making decisions based on your gut.
So it's protection against your own emotional biases.
Yeah, exactly. And it's something you should update as you go. Check it regularly. Make sure it still fits your situation and your goals as they change.
Okay, so we've got a plan. We're being mindful about spending. We're staying calm when the market gets crazy. What else can we do to stay on track financially?
This might sound simple, but it's really important. Don't compare yourself to others.
Oh, the whole keeping up with the Joneses thing.
Exactly. Everyone's money journey is different. We have different goals, different incomes, different expenses, different values. Comparing yourself to others just makes you unhappy. You end up feeling inadequate or jealous.
It's hard not to fall into that track, especially with social media showing everyone's perfect, curated lives.
It's everywhere. But instead of comparing, focus on your own progress, celebrate your wins, even the small ones. Whenever, success means different things to different people.
So define success on your own terms, not based on what others are doing or what society tells you to do. Create a financial life that makes you happy, not one based on keeping up with the Joneses.
That's a great way to put it.
We've been talking about spending based on our values and not comparing ourselves to others. But it makes me think about contentment. How do we actually feel content when the world's always telling us we need more, more, more?
Contentment, huh? It's tough to find, especially these days, but it's so important for our money, for our well-being. If we're never satisfied, we're always chasing that next thing, the next purchase, the next level of income. It just goes on, and it can lead to debt, overspending, just a ton of stress.
So where do you even start? How do we feel content when everything's telling us we need more stuff?
One thing that really helps is gratitude. Appreciate what you already have instead of focusing on what you're missing. Shift your attention from what you don't have to what you do have.
Be present, right? Notice the good stuff, the things money can't buy. Relationships, health, experiences.
Exactly, and be mindful about spending too. Before you buy something, ask, does this really make me happy, or am I just trying to fill a hole?
It goes back to aligning your spending with your values, but what about thinking long-term? Everything's so instant gratification now.
You're right, it's hard to think about the future when everything's moving so fast, but Housel really stresses not just focusing on right now, but thinking about how your decisions today will affect you later. Delaying gratification, making sacrifices now so you can reap the benefits later.
Playing the long game, not just looking for the quick win.
And one of the best ways to play that long game is to invest in yourself. Your education, your skills, your health, those are investments that will pay off for years to come.
So it's not just the stock market, it's investing in your own ability to earn, to learn, to grow.
Exactly. And this ties into another idea we saw a lot, having multiple streams of income. Don't just rely on one thing, like a job. Diversify your income so you're more financially secure and flexible.
Like a safety net, just in case something happens to one source of income.
Exactly. You could start a side hustle, invest in rental properties, even create passive income with things like online courses or ebooks. There are so many options.
I love that. Being proactive, taking control of your financial future. But it can be scary, right? Taking risks, putting yourself out there. Housel talks about not letting fear hold you back.
Fear is normal, but it can really stop you from doing anything if you let it. One way to deal with fear is to think of it as excitement instead. So instead of, I'm scared to start a business, try, I'm excited to challenge myself and see what I can do.
It's about changing your perspective, focusing on what you could gain instead of what you could lose.
And it goes back to that growth mindset, believing you can learn and improve, welcoming challenges, seeing setbacks as chances to learn. That applies to your finances just like anything else.
It's like having that can-do attitude, believing you can figure things out, you can reach your goals. But with all our talk about money and investing, it's easy to get caught up in the numbers, isn't it?
That's why Housel says don't let money define you. It's a tool. It can be used for good or bad, but it shouldn't be the only way you measure success or happiness. True wealth is about so much more than just your net worth. It's your relationships, your health, your passion, your purpose. It's about living a life full of experiences, not just stuff.
I love that. It's a good reminder to keep things in perspective. But how do we stop money from controlling us? How do we find that balance?
You have to remember money is a tool to help you reach your goals. It's not the goal itself. And one of the best ways to use money is to give back, whether it's donating to charity, volunteering, or just being kind and generous to people around you.
It's about using what you have to make the world a better place.
And it's also about enjoying the journey. Life is happening now, Don't put off your happiness or your dreams until you hit some random financial milestone.
Don't wait till you're rich to start living.
Exactly. Find joy in the present moment while you're working towards your long-term goals. Find that balance between saving and spending, working and having fun, striving for more, and being content with what you have.
Okay, balance. I'm going to try to remember that, but we've talked about so much in this deep dive. Is there one big takeaway you want listeners to remember?
You know that Mark Twain quote, "History doesn't repeat itself, but it often rhymes."
I love that one. What does it mean for our money?
It means we can learn from the past, but we can't assume the future will be exactly the same. You can't just look at how the market did before and expect it to do the same thing again.
Because the world's always changing.
Right. New technology, new industries, unexpected events that shake things up. One source had this great image. They said to imagine Mr. Market wearing a Capitalism at Work t-shirt but carrying a sledgehammer.
That's a powerful image. So how do we make smart choices when we can't rely on the past to predict the future?
Be adaptable, have that growth mindset, be open to new information, be willing to change your plans. And remember, there's no one right answer for everyone when it comes to money.
What works for one person might not work for another.
Exactly. It depends on your goals, your risk tolerance, your situation. Like one source said, beware taking financial cues from people playing a different game than you are. Just because someone's making a ton of money in real estate doesn't mean that's the right move for you.
You got to figure out your own game and play it the best you can.
And that brings us back to what Housel is really saying. Financial success isn't just about the numbers. It's about understanding yourself and how you think about money, your psychology, your emotions, your biases.
It's about the stories we tell ourselves about money and how those stories affect our choices.
And in the end, it's about using money as a tool to create a better life, a life that aligns with your values, your goals, your dreams.
That's a great way to sum it up. So as we finish this deep dive, what's one question you want our listeners to think about?
If financial freedom is about having enough, how do you define enough?
That's a perfect question to leave everyone with. It's not just about the numbers. It's about what they mean to you, what really matters.
And on that note, I think we've reached the end of our deep dive.
Thank you so much for exploring the psychology of money with us. I know I've learned a ton, and I hope you have too.
And remember, this is just the start. The journey to financial well-being never ends. Keep learning, keep growing, keep figuring out what enough means to you.
Until next time, happy diving.